Just days ahead of the union budget, and this time around it's going to be a full working Saturday. Not just the budget announcement, but the equity markets also are going to remain open. This is clearly a first in the history. So will they really make up for that one weekend that we're going to be working or not? Will they really live up to the market anticipation? It's a big question mark on that, Nikunj. Lots of expectations running high, be it long-term capital gains tax, what's going to come about in personal taxes, will they hold up on the fisc or not? And if it is compromised, what is it going to be compromised for? Is it going to instill growth or not? I think the market has too many questions on its mind right now.
Even though we know that the importance of budget over the years has got diluted, but this time around, unfortunately, expectations are running very high, both in terms of market levels and also what the messaging seems to be coming. And, this must be one of those rare budgets, Aisha, where markets would say, bust the fiscal deficit. We will be happy if you miss your fiscal deficit
But
target.
for growth.
But for growth. But if you don't miss your fiscal deficit target, it's more bad news than good news. What has been the narrative with the earlier budgets? Please stick to fiscal deficit target. This time, please don't stick to fiscal deficit target. And that's largely because, Aisha, because of the phase of the economy we are in. The four pillars of the economy, consumption, or be it exports, or for that matter, investment or government spending. The only reliable consumption now is government spending. And that's where I think all the tension is going to be. Does the finance minister have a magic wand that she can spin things around? I don't think she has a magic wand. But the markets are telling you that she will do something special, something which will surprise the market, and hopefully on Saturday evening, instead we should say, wow. That's what markets are betting on.
Hopefully
right or wrong, I don't know, but that's what expectations are.
Hopefully so. So let's figure out what really the markets want. And two gentlemen who need no introduction, part of the ET Now think tank as well on budget day. We've got on board with us A Balasubramanian as well as Nilesh Shah joining in to answer just that. Gentlemen, afternoon, Bala, is it going to be worth it, the working Saturday? Will we be all smiles on Saturday evening?
Yeah, I think sure. I think as Nikunj was mentioning, the last 1.5 years have been a tough year, both from the credit market point of view as well as from the overall slowdown that we have witnessed across all segments of the businesses. A lot of sessions have been going around, and a lot of everyone who matters, and everyone actually who has seen the market cycles now actually have been giving a representation to the government and various bodies through CI and FICCI and directly and so on and so forth. So now there is a big realization is there that yes, economic slowdown is there. Therefore, we need to do something different. And what different? Of course, a lot of sessions are also going around. But thing is, somewhere down the line, that I think we also have to see this as an opportunity for India, and especially when global market, global economy also is trending towards some kind of slowdown path, and therefore India actually can come back quite quickly if we actually fix some of the issues that we feel that is the real reason because of which the economic slowdown has happened. So that's something I think will get addressed in the budget. Clearly, the expectations are there in the form of touching the taxations and looking at capital gain tax adjustments, and also the look at sectors that can actually revive the growth, whether it is from real estate or from manufacturing sectors or even sectors like textiles, whether I can actually revive the economic growth, both in coming back on the manufacturing side as well as creating employment. Therefore, a lot of expectations are built. Of course, all cannot be addressed in one budget, but having now seen and taken feedback from the multiple people who matters to the industries or matter to the economy, and that's something which the government actually seriously implement some of them. Probably the budget would set the ball rolling, reset the rather economy for the next round of growth.
Nilesh, let's take it from the top, the fisc deficit number, which last time the finance minister did not even mention in her speech, by the way. But this time around, is it a given that it's going to be challenged? And if challenged, for what? I guess that's going to be extremely crucial.
Yeah, absolutely. I think like what Nikunj said, that, every time it's been that, okay, don't cross the red line. But I think this time, essentially, crossing the red line seems to be a kind of a given. Now, the question is, for what do you cross the red line? Is it because of shortfall in revenues, or is it going to be more of spending? And even if it is spending, it's going to be to boost infrastructure, ensure that infrastructure projects go off the ground and you build world-class infrastructure, or is it basically to expand the social welfare schemes? I think that is really where basically the market is going to be more interested in, that what are the granular details which are going in to kind of come up with that magical number of the fiscal deficit. And that's going to be basically the big area of focus for the markets, be it debt markets, be it equity markets, even cues on growth are essentially going to come in from that fiscal deficit number. I think just saying that we'll probably grow at 6 or 7% may not essentially be may not satisfy the markets, but it's going to be that, yes, okay, fine, if you are targeting a 6 to 7% growth, what is that fiscal deficit number?
So a 3.5 to 3.8% kind of range is something that the market is okay with?
Yeah, I think as long as you probably, optically, any number below 4, which means that even if it were to kind of go to a 3.9, I think it should be fine. Provided essentially the market sees that a lot of that slippage is going to happen because there's going to be a huge impetus towards infrastructure build-up and getting towards that 100 lakh crore of infrastructure spending, which the government has already announced. So I think that essentially is going to be the big number to watch out for.
Right, Bala, one important aspect is for us to understand what is the market positioning. And market positioning, in a sense, will drive the short-term performance. Sometimes good budgets have also met with a sell-off, and sometimes bad budgets have also seen market making a comeback.
Correct.
The mid-cap index in the month of Jan is up 8%. Nifty is sitting at an all-time high. There is an economic slowdown in the country, but stock prices at the screen is telling you a different story.
Right.
What if this time's budget is a budget where nothing changes, at least on the taxation front? It is status quo. What happens to the market then?
I think as you rightly put it, one is expectations getting built up, but the market of course starts building up on the basis of expectations just before the event itself. Now, having seen that, I think people are realizing that the capital gain tax which was introduced has not done much to the government in terms of adding to the tax revenue. I think hardly they would have got any kind of tax revenue. Therefore, having such kind of provisions and not getting the real purpose for which it's been implemented, and they're not getting any kind of additional revenue to the government, then what's the point in having that? I think my view is, I think government is looking at such kind of provisions. Is it actually having really a change actually from the government, from the point of view of the revenue, or from the point of view of growth, or from the point of view of getting incremental money into the stock market? I think I would probably assume this thing could be actually addressed in the budget.
I don't want to use the word attitude, Bala, but I think last budget forced us to use the word attitude.
Correct.
The attitude of the government towards who are paying more tax and towards wealth creators. That changed in the last budget.
Exactly.
In terms of an attitude or an approach, do you expect something which could be incremental? Every time we've discussed, Aisha, the budget, we've always questioned the assumptions and the final maths. But I want to question the attitude which change after last budget changed.
So the Aam Aadmi versus rich.
Exactly.
Yeah.
I think the way I see is this budget, as contrary to the last 4 or 5 years of the social related kind of focus was too high. This is the first year budget. I would assume probably the higher focus will be given for the economic recovery. I think the point what you mentioned about earlier on fiscal is that fiscal is at this point important, or actually drive the capital spending is actually important, even at the cost of the fiscal going up. Probably I would assume that given the fact that credit growth in the country is actually one of the lowest and demand for money is not there, at the same time liquidity is the highest and interest rates are low, I think the best time actually to slip on the fiscal, even if it means that our bond yield is going to go up by about say 10-15 basis points. But as long as there is high visibility that comes, yes, government is quite serious about making the public sector investments quite high in terms of building the infrastructure's needs. I think these are some of the how you allocate your capital, even if it comes at the cost of your tax not being up to the mark. And that's something which will come. Secondly, from a capital market point of view, so far the dependence on rising resources has been largely through the debt. And what we have seen in the last 2-3 years, high debt borrowing companies are the ones who are the sufferer. At the same time, it's also duty of the government as well as the regulator to create a right environment for them to raise equity capital. And the equity capital will come only if you keep the equity market at a good state. Then only the equity capital can be raised. Therefore, from a corporate's point of view, equity market remaining buoyant is important. Therefore, whatever needs to be done in order to get that back is something in my view will be done in the budget.
Nilesh, on taxation and capital markets, we've all seen as to how the corporate tax rate cuts sort of put a floor to the Nifty. Could the same happen if indeed LTCG is tampered with? Now, I know expectations are anywhere from it getting extended to 3 years to a complete abolishment. Who knows what's going to come? But in both the scenarios, what could be the possible market move?
So there are two things. I think, some of these taxes act like the cholesterol in your body. So imposition of the LTCG was essentially like having bad cholesterol. Okay, and you need to basically address that issue. It does not necessarily mean, therefore, that that will lead to good cholesterol or not, but essentially this is something which was unwanted. And I think the first philosophy of the budget, I would expect it to be that do no harm. The last two budgets, be it 2018 or 2019, 2018 imposed LTCG, 2019 imposed basically the tax on the super rich. So I think the first principle which ideally I would expect is that don't do anything like that, number one. Number two is the LTCG, imposition of the LTCG tax has not helped you in any way. Forget the kind of impact it has had, especially on the mid and the small caps, but nevertheless, eliminate that. I think that is something which will send a lot of right signals, especially to the international investment community, because I'm no tax expert, but I'm assuming, or I'm told that if you are, for example, a foreign investor in the US equity markets, if you are a foreign investor, you do not pay LTCG on those gains out there. So similarly, I think some of the foreign FPIs will also be expecting that remove this LTCG, and I think that essentially is the big tax reform. If you call it also a tax reform, it's something which is basically the market is really looking forward to, and I just hope that this budget really obliges the market on that front.
See, Asha, the way I look at it is that you ultimately need foreign capital. And when you need foreign capital, do you want to make life easy for them or do you want to make life tough for them? That's the most important narrative. Second, for corporates for taking risk, whether it's entrepreneurs or risk takers, what is really the whole proposition to increase the profit pool of India? That messaging is important. We can endlessly get into this scheme, this yojana, that yojana, this grant, that grant. I think that would be there. But for me, I don't know if you guys agree with me. For me, the messaging is important, and which got lost in the last budget.
Yes. And Nikun, I'll just build on from that. The Prime Minister himself, I think when he went to the United States, I think there he publicly said that, taxation on equities would essentially be brought at par with whatever are the established practices world over.
Yeah.
I think he has already said this. Even at the 15th August speech of his, he said we need to respect wealth creators.
And the gap between personal tax and corporate tax, Bala, is so large that somebody needs to address this gap.
Yes.
Correct.
So to that extent, I think that philosophy now seems to be there. I think these are coming in from the public statements. It's just that one is now looking forward to the budget to essentially basically see that there is really now the government who's going to walk the talk on this front or not.
So second, which I like this time is, so when you prepare a budget without connecting to the market players, or prepare a budget after understanding what is the ground level reality and see what needs to be done in order to fix some of the issues that's being faced by the country as a whole. At this time around, Prime Minister, I think himself is spending time with all the market participants. It's something is a big clue for a budget which can have one stronger messaging. Second is showing concern of the economic slowdown that we are seeing, and take steps that could revive the economic growth. May not be in the near future or maybe 6 months or so, but at least over a period of next 1 year give a visibility for the economic growth to come back. And all this thing will come through the taxation adjustment, as well as spend some money in terms of getting the growth back, in terms of either corporate investors coming back or the government spending go up.
It's a chicken and egg situation, isn't it? Can you really afford to bring taxes lower? Given that there is a complete miss on direct taxes in GST, the elbow room to do that is little. Can you really go ahead with a solid disinvestment process in this kind of an environment? Well, given where valuations for PSU stocks are, it may not be a very wise strategy. So what I'm trying to understand is that where do you think markets will say, look, we want more, but we will get so much? What is that line between want and being reasonable? There has to be a balance, right? What is that balance? What will make the markets not unhappy, and what will maintain this rhythm in the market? Because even if we stay where we are, I think we should be happy.
Yeah.
So the way I look at it is that I'm not sure how much has essentially been the collection from LTCG on listed equities ever since it was imposed.
That's the low-hanging fruit.
So I'm just saying is that will do no harm to the government as well in terms of revenue collection. So that's something which can do a lot more good, at least in terms of ensuring essentially that the spirits remain high, sentiment remains positive. So I think it's going to contribute more towards that, and will not essentially take away any of the revenues from the government. In terms of personal taxation, I think even this year, if it's given a go by, I think that should be fine, saying that, look, we have a challenge. Let's
You're
not
happy
think
with 42%.
It's not a question of being happy. What I'm just saying is, if it gets
So
if it probably, I think nobody's ever satisfied with any of the taxes which is imposed on them. I think that's a given. The question is, I think that you are at a tough situation right now. Of course, if it's lowered, great, wonderful. That's a huge gamble the government is saying, and probably the street might look at it positively, saying is, here is a confident government which says that I'm lowering taxes, but lower taxes will result into higher revenue collections for me. So that would be a great signaling, but I'm not too sure whether that will be done or not. Versus that, the LTCG is a way more easier option, number one. Number two, things like buybacks, encourage buybacks. I mean, I think there are enough studies which says that the US equity markets over the last 10 years have had a remarkable sprint or a huge up move, and a huge contribution to that has come in basically from buybacks. I think the Apple as a company, if you look at it, over 3-4 years, there has been no major growth in their earnings. But look at the stock price. Yeah. It's a prime example. It's putting your capital to work. So if there are any hurdles, and I know for a lot of companies, in fact, especially a lot of the smaller companies, when we speak to them, saying you are sitting on 200, 300, 500 crores of excess liquidity, why don't you essentially return that money? And I think the refrain which comes essentially is that look at the taxes if you do a buyback. Does it make sense? So I'm just saying is remove those kind of things so that essentially money goes back to shareholders, which in turn are also consumers, and that money will probably go back as investments or it will go back into the consumer market. So I think these are some of the things which are not contributing in a significant way to revenues, but do them right. I think this is very, very important.
You know, Aisha, IT companies use this entire buyback route to pay back so much cash to their shareholders. I think TCS did 2, Infosys did 2, Wipro did 3 before the law changed. I mean, it's like, why do you really want that when you want money to come back from a balance sheet which has been invested in the government bond or in fixed deposit in State Bank of India back to the consumers? I mean, today if you have to make a case, LTCG, change or extension, and buyback tax. These are 2 low-hanging fruits which can be plucked. And I don't think any companies would have really done buyback after the law changed.
Yeah, none.
Absolutely.
I think TCS was before it was implemented.
Second is, Nikunj, even the sector which is one employment generator, as well as the whole ecosystem gets benefit out of the sector is the real estate sectors. While one can argue that the prices are high and therefore there has to be a drop in prices before we actually start making any kind of change in the regulation, or maybe any kind of tax minimum one has to give. But given the fact that the sector has got multiple way of giving growth back to the economy, that the sector has to get addressed, which is nothing but to push up reduce the inventory and push up the sales volume, even if it comes at the cost of an incremental growth, even if it comes actually the lower taxations, as long as it is able to actually create the whole ecosystem much better. That's something which I think can be addressed to the budget.
So more than equity market, real estate market perhaps needs a bigger reform.
Absolutely. Though there is chatter that that's going to happen. The other thing on taxation is there is a heightened, buzz in the market that personal income taxes will be reduced in the 5 to 10 lakh rupee range as well. Now that's the segment which has the propensity for immediate spending, and that's going to trickle down to your consumer staples. If that were to be the case, do you really think this consumption, which has sort of been a bottleneck, that's going to get kick-started?
I think today if you look at the entire two-wheeler space or car space, or even for buying actually the consumer durables, there has been a slowdown. I think every industry in this players are actually expressing concerns. How do you address that? Boosting actually income in the hands of middle class populations. Second is, if you more the tax you give, even up to say 15 lakh rupees or 20 lakh rupees kind of income, the more the saving that comes actually helps in terms of that making the EMI payment. Therefore, that if it is addressed, the kind of population that address is like the working population is quite large. Second, of course, they'll also get the boost of this, which of course government doesn't include in the budget, which comes from rural income going up because of good monsoon leading to good crop output. Therefore, these two combinations, I think, can help in driving the economic growth. I think as per the numbers, it's not more of rural income actually is the issue. Today, the urban income has actually gone for a toss, and that need to get revived to get the economic growth back.
Nilesh, how critical is divestment going to be? And I remember even in the interim budget last August, we were talking about that. We've now sort of heard the broad plan that the government has with regards to divestment, but how critical do you think is including asset sale in it? If you want to sell Air India, sell it wholly. If you want to sell BPCL, sell it wholly. If you want to sell VSNL, sell it with the land. Do you think that clarification can come? And that can be a big clarity and big relief to market as well.
No, absolutely. I think disinvestment, privatization, I think are very, very critical not just from a numbers point of view. It's not just about the arithmetic, but I think it's conveying the philosophy.
True.
And clearly the philosophy of what the government has always been saying, that minimum government, maximum governance. And I think clearly, I mean, that's of course always been there, that we don't need to basically run a lot of these kind of companies. And I think I would really want the privatization program to expand and expand in a ferocious manner, in a very aggressive manner. And I think the government needs one big victory on this front. I mean, be it BPCL, it's like, getting your first stock idea right, or basically scoring your first century. And when you do that, obviously it lifts the spirits.
Morale,
and I think,
yeah.
absolutely. So I think government needs that one first success. It has got the right intent. I think it's kind of really woken up to this reality that we need to privatize. Now I think it needs one successful strategic disinvestment. The day that happens, my sense is that that list of contenders for privatization, I think, will kind of increase significantly. And I think a lot of the apprehensions which are there for the bidders, saying is, post that, will it happen? Will there be any chasing which will happen and all that? I think a lot of those concerns also need to be addressed. I think some of the privatization which happened in 2000, 2002, and the government still owns some equity there, despite the fact that it's become a lot more valuable. Now I'm just saying is that ideally one should try and ensure that in now the future rounds of privatization, those kind of issues do not remain. So I think that will encourage a whole new set of bidders to really come in and bid aggressively.
So one more thing they should do on divestment is they should stop the ETF supply.
Which they already have.
More the supply of ETF comes in, then more the damage to the underlying stock price also happens. People buy an ETF, then come and sell in the market. The moment they do that, as Nilesh says, they actually stick to only the strategic way of selling, and bring the strategic buyer and get the best value for some of the POC companies through the bidding process, probably can actually do more benefit to this market on one side as well as to the government.
See, again, Aisha, it comes back to the whole intent. Because if the intent and the messaging is clear, then, I've realized over the years that Indian entrepreneurs can really take a risk, provided they know that there is safety to the capital and they are able to get decent returns. Now, if the sentiment revives, Aisha, we are looking at the IPO revival, we are looking at equity culture coming back, we are essentially looking at entrepreneurs taking more risk. We are, we've dealt with these slowdowns in the past, but how have we come out with these slowdowns? Government's assurance that equity capital is going to be raised and foreign investors have betted on us. So it's not that we've gone to some dark age or something. It's just that if the communication changes, if the attitude changes, if markets are convinced that this government wants growth, they may do some sloganeering, which is okay. But if that attitude changes, I think the sentiment could change.
Nilesh, each and every report that we've gone through, the market, it seems, is anticipating a budget which is going to be loaded with reforms. With the Nifty almost ballpark at an all-time high, 5 weeks of a mid-cap recovery, do you think the margin of error is very low? If indeed it's a disappointing or neutral kind of budget, will we fall then in that case?
Well, of course we could. I mean, obviously I think the expectations are running high, okay? The expectations were running high even last time, because essentially the government had just won a historic mandate again for the second term, and then of course the last budget came and there was imposition of tax on the super rich, and we saw that the markets, I think, corrected from about 12,000 plus to sub 11,000, and then of course the corporate tax rate was cut, and that obviously again lifted spirits and lifted the sentiment. So clearly again expectations are running high, especially post the government lowering the tax rate in September. There is essentially dil mange more kind of sentiment which is really prevailing out there. And as I was saying earlier, that if there is again fresh tax which gets imposed, okay, or if some of the things like LTCG and all do not happen, that would kind of provide a reason to the markets to basically trigger a correction. So obviously, yes, expectations are running high.
Bala, if there is a correction, would it be steeper in the frontliners or the broader market, considering broader market recovery has just about started?
So I think the steeper correction probably looks unlikely, only for one simple reason: the liquidity in the market is quite high. The global liquidity also is good, and therefore the money is coming to the emerging market as well as the ETF flows continues to be on the rise.
So neutral budget also we will not fall, you're saying?
Every fall, my way will be taken as an opportunity to buy an opportunity, not with high conviction, but I stay invested in equity.
But that you've been saying from 20 years.
I think that still stays.
That still long-term picture is great. But Nifty has given returns equivalent to gold in the last 10 years. That's 10 years.
Yeah, true. I think the biggest thing is actually coming in equities favor is the one still underpenetrated. A lot of people still want to own equity. At the same time, the market is not actually volatility in the market has gone down quite significantly. And third, of course, the kind of ETF flows that's coming in, with chasing actually large cap names since Nifty. That's why Nifty has done much better. Not just only in India, even emerging market flows now is getting increased. With this kind of scenario, while we may probably see, otherwise there is absolutely no reason, with a 5.3 or 5% kind of GDP growth, there is absolutely no reason for the market traders high PE multiples. The reason is coming because of the liquidity and the hope that budget will actually revive the economic growth back. Therefore, they are now looking at 1 to 2 years in the coming period rather than looking at the past 1 year.
Actually, the average swing on the budget, and this is last 10 years data, is about 2.5%. Now, the point you could ask yourself, on the budget day, are we in for a big swing day? Well, it's a Saturday.
So no global markets.
No global markets. I get a sense, looking at the market positioning and what markets are expecting and where the bent of the economy is, you would say that we could be in for a big swing.
Okay, we'll find out on Saturday. Bala, Nilesh, we'll see you as well on Saturday. It's not just us who will work, but everyone else as well. And we'll find out what really the finance minister delivers and or how the markets absorb the budget this time.